Wall Street, the US stocks ended at all-time highs, with major indices notching the 10th record close of November. Sentiment was lifted by positive commentary on the US-China trade deal and an upbeat assessment of the economy from Federal Reserve Chairman Jerome Powell. Now, the Dow Jones ended up 55 points. The S&P 500 and the Nasdaq also gained 0.2% each. Now, retail stocks, they were the big underperformers in trade yesterday, rather outperformers in trade, after Best Buy posted quarterly earnings that beat analyst expectations. CNBC's Eric Shemi gets us a wrap of all that transpired on Wall Street yesterday.
U.S. stocks trading higher, getting a boost from retailers like Best Buy and Dick's Sporting Goods. The Dow finishing up 55 points, the S&P higher by 6, and the Nasdaq up 15. U.S. consumer confidence dropping for a fourth straight month in November. That's according to data released by the Conference Board. Despite that, expectations for the holiday shopping season still remain strong, with the National Retail Federation expecting sales to jump 4% from a year ago. The Wall Street Journal is reporting that federal prosecutors in Brooklyn have opened a new criminal probe targeting opioid makers and distributors for violating the Controlled Substances Act. The companies include Teva, McKesson, Mallinckrodt, AmerisourceBergen, and Johnson & Johnson. Shares of those companies dropping on the news. And shares of Dollar Tree plummeting 15% after the retailer lowered its guidance for the fourth quarter, the company blaming tariffs for the weaker outlook. Dollar Tree also fell short of analysts' earnings expectations for the third quarter. That's the action from the U.S. market. Back to you in Mumbai.
Well, on that note, let's get in some expert opinion on the road ahead for the U.S. markets.
I think it's fair to say over the last few weeks that there has been a boost to risk appetite, because at least the trade talks are still continuing. At least the two sides are still at the table, and that certainly has been enough to push up hope, really, to push up risk appetite. But at the same time, I think if we look over the one-day view, I think you could probably identify signs of fatigue. Maybe the markets are beginning to think, well, you know, look, we still don't have a date. We still don't even have a location. We still don't even know whether or not this trade deal, this phase one trade deal, will be signed this year. And even if there is a phase one, well, what about phase two? And perhaps that's even going to be impossible. So perhaps on some level there are a few doubts creeping in.
See the data somewhat similarly to how he sees it. We believe the fiscal stimulus was really the catalyst for the economic growth that we saw in 2018, and the reason we're seeing the deceleration now in economic trends. But what's interesting is the industrial data is in the process of bottoming. That's really where you want to focus. The bounce in ISM manufacturing and industrial production is going to propel stocks higher in 2020, and that will be the driver of market success.
We're expecting a sequential acceleration in the U.S. as well. Annual average growth next year in the U.S. probably pretty close to this year, 2.25% or so. But that probably understates it a bit, because we're ending 2019 on a low note, and we would expect some acceleration as we move into next year.
All right, then, turning attention to the European markets, they ended mixed yesterday's trading session. This amid there were some marginal gains in select sectors, and also trade optimism continued to play its part. The Japanese DAX, in fact, that was underperformed on yesterday's trading session, ending mildly in the red, but both the other couple of markets did end mildly in the green. In terms of peripheral Europe as well, you had the Irish index that did well yesterday. That was up more than 1%. And you had the Italian index as well. That was up roughly around 0.4% or thereabouts. So peripheral Europe did relatively better.
Well, time now to take a look at the world of currencies, because the US dollar edges slightly lower against a basket of currencies as traders look ahead to the latest developments in the US-China trade talks. Meanwhile, the Japanese yen has weakened versus the dollar.
And a quick check on the world of commodities, and crude oil prices gradually move higher on positive news flow on the trade deal. Additionally, predictions for a weekly draw on US crude stock supplies also lend some support. Brent crude prices now holding a little above that $64 per barrel mark.
Well, it's time now for a quick break on the show. Up next, we'll get you all the cues and news you need to know for trade this morning. Stay tuned.